Welcome in, Scott Beeson. It's the start of the fourth quarter on Yellowhammer Radio on a Wednesday. And as you know, we have a friend of the program, Jeff Roberts, who visits with us. He's with Jeff Roberts and Associates, helping you with your financial planning and all the things that deal with retirement, moving up to retirement, through retirement, and during retirement, which is the part of it that many of us forget about. Let's go to the phones now and talk to Jeff. Jeff, how are you today?
Very well, my friend.
Man, it's good to hear from you.
Happy holidays to you, man.
Absolutely. Merry Christmas to you, too. And what's been going on? What's on your mind?
Well, today I just got back in town. I've been out meeting with some clients on the other side of the country and got some interesting thoughts that I thought I'd come in and share with you guys. Today we're going to talk a little bit about – it starts with kind of 5 general uses of money. And if you break it down, there's really 5 things that we can use money for. We can use money for saving and investing, which, of course, being the financial guy, I kind of like that a lot.
I would think you'd be partial to that, yeah.
I'm pro investing, no doubt about it. And then we can use money to pay on debt. Folks that still have debt payments, whether it's a mortgage or a car or something, you can use money to do that. You can use money to pay taxes. And then you can use money for lifestyle, which lifestyle is, the entertainment, dining, travel, committed expenses and discretionary things, Walmart visits. And then lastly, the 5th use of money is giving it. You can literally give it away. So we can basically save and invest, pay debt, pay taxes, use it for our lifestyle, or give it away. That's it. If you break it down, that's really the 5 things that you can do with money.
Yeah, see, I'm big on lifestyle, which means I spend it.
Yeah. Well, as an advisor, that's where we spend a lot of time trying to coach clients away from the lifestyle issues, or at least capping it to some point so that they can plan for their financial
future. Yes, sir. So, I would figure that'd be a big challenge.
Oh, now. But then there's clients as well that are in a situation where they're blessed to be able to recognize, I'm in a position to be able to give. We talked a little bit about this a couple of sessions ago, but I want to focus on it today. Being the holidays, the Christmas season, the time of giving gifts, gifting is a good thing to be discussing. So the first thing that's important that we like to talk with clients about when it comes to gifting is planning. And again, you're going to hear me say this over and over when we have these discussions, but financial planning is the key. Because if you knew, just imagine if you were somebody, let's say you're pre-retirement or in retirement, and you had a desire to maybe gift some dollars to some family members or a charitable organization. One of the things that's important for you to know is, can I do that and it not significantly impact the standard of living or the lifestyle that you're wanting to maintain in retirement? That's what we hear from clients all the time. I love to give the money away, just don't know if I can afford to.
Right.
So a good comprehensive retirement plan can help people to forecast out the math. Let me give you an example. So I was working with these people recently. They have substantial assets, and they felt as though they wanted to give some away, but they were, like many people, concerned about giving it away and needing it at some point down the road. So we did some forecasting and said, well, let's just assume we carve some money out of your nest egg that we're using in our calculations, whether it's $10,000, $50,000, $100,000, $1 million, whatever. Carve that amount of money out of the analysis. Forecast your retirement for the next 30 years into the future, assuming inflation and everything else. And if the math still works and you still look good down the road, then that proves there's some money that you have today that's not necessarily needed, and you can afford to give it away. And the nice thing about giving, and this is obviously it varies per person, but hopefully most people get a joy out of giving to others.
Right.
And with these particular people I was working with, they really wanted to see the benefit of gifting some of those dollars to family members while they're alive and see the economic benefit of that in their lives, again, while they're alive to see it, and it can benefit their children and grandchildren the most.
Now, that does make some sense. I know of a person who could, if they had visited you, they would have been a lot more at peace in their retirement years. And this person's still alive, but this person was so worried every day that they would outlive their retirement. And
Right.
they didn't understand the projections. They didn't, and they would not do things that they really, really wanted to do because they just didn't have that peace of mind that comes from talking to you about it. Whether it was gifting or any other thing that they might use their money for, they were just kind of trapped by it. And now we're a couple of decades into that, and they could have done all these things you're talking about, but they didn't have someone like you to walk them through it.
Well, these particular people that kind of got me thinking about this subject to share with the audience, they're in a position where they could gift dollars to their family members, and you're allowed to gift per year $14,000 per person per year. So, for example, let's say I decided that I wanted to give, say, my nephew $14,000. I can give my nephew 14. And if I had a niece, I could also give that niece 14,000, and I could give 14,000 to as many people as I want to. Now, I'm not married, but if I was, I'm able to give my spouse an unlimited amount of money in any given year. I can give my spouse $1 million. My spouse can give me $1 million. Well, that'd be nice.
I thought that just came with the program. I mean,
Yeah, that's right.
I didn't understand there was a rule about it. I thought you just gave them all your money.
You're allowed to give your spouse as much as you want, but if you're going to give children, grandchildren, nieces, nephews, friends, relatives, family members, brothers, sisters, you're limited to $14,000 per person without any type of gift tax. Now, here's the interesting thing. So I can gift my, say, nephew $14,000, and if I was married and we didn't have kids, my wife could give that same nephew $14,000 as well. So each person can give another person $14,000. Between my wife and I, we can gift away $28,000 to one person between the two of us. And we can do that all the way up to January 1 or December 31st. And then January 1 into next year, we can gift again. So every year you're allowed to give those gifts. So it's a great time this year where people can make gifts to other individuals in their family that they love and want to see benefit. And they can turn right back around and do it again January 1. So that's one idea. And then, of course, charitable giving as well, which is tremendous because if you give dollars, not only do you benefit the organization, but you can have a tax deduction for yourself. And as we talked about in a previous session, we recommend people consider gifting highly appreciated assets. Like if you have a stock that's appreciated in value, if you cash it in, you're going to pay capital gains taxes. Give those appreciated shares of stock to a charitable organization, and they can sell it without any capital gains at all. But here's kind of another neat strategy before I know we're going to wrap up due to time today, but there's a concept called a donor-advised fund, which is when this can be used when somebody has money that they want to gift out. Like say somebody in the audience wants to gift away a substantial amount of money this year in 2016 before the end of the year for tax purposes, but they don't know who they want to give it to yet. They don't have the particular charity worked out. They just know, I'm making this up, they've got $100,000 they want to give away.
Right.
Well, you can contribute to a donor-advised fund. And a donor-advised fund is literally like a charitable organization you put your money into and you get the full deduction right now. Then the money sits in the fund, and then you can gift it out over time to whatever organizations, 501(c)(3) organizations that you want to. So
really, so it's your own charitable. Well, I know I'm going to use a word that doesn't fit it, but it's like your own charitable trust.
You're spot on. You're spot on,
wow.
And it enables you to gift money. I use something like that for myself because it helps me to track my gifting. And a lot of these donor-advised funds literally have neat websites, and they track all the money that you give, and so you can kind of see your history of giving and that sort of thing. So there are many different tools, but that's an example of one that can be considered. And then another quick idea at this time of year, there are people that like to give investments or shares of stock to family, and there are some websites you can go out there and Google. There are kind of some unique stock gift websites where you can basically buy one share of stock, ABC company or XYZ company, and they frame the certificate for you, send it to you, and then you can gift that to a family member, somebody that you want to give a share of stock. And so they can kind of package that for you automatically. Kind of a neat idea Christmas time as
Yeah.
well. So anyway,
I mean,
different ideas
you know,
on gifting.
I'd rather have the gift stock from you, Jeff, for Christmas than you naming a star for me like you usually do.
You got it, my brother.
Anything else before we wrap up?
That's it. Just if there's any of these types of gifting strategies that folks have questions on, or if other planning issues that we can help address with people, feel free to give us a buzz at 313-9150 or JeffRobertsonAssociates.com.
Absolutely. I tell you what, that donor advised fund is the one that really pricks my interest, because you just never know at the end of the year. Hey, look, I don't want to load up this one group or charity because I don't know what else I might want to do later, but I need to get it in before the end of the year for tax purposes. That's
Bingo.
really something that I would be interested in. I hope some people will call you about that. Appreciate it, Jeff.
Take care, my friend.
Take care, buddy. Good call.
Bye-bye.
That's Jeff Roberts of Jeff Robertson Associates. You know how to get in touch with them. They are a great friend of the program. They've given tremendous advice to us on this program, and I've had a lot of input over the last few weeks about, hey, look, that's just a quick thing, talking about stuff that so many people are not aware of when it comes to their finances. There are ways to plan and be much more at peace about your finances if you talk to somebody like Jeff Roberts. You're not just going into it blind. So I highly recommend those guys over there and what Jeff and them do. This is Scott Beeson at Yellowhammer Radio. We'll be right back.
This is Yellowhammer Radio.